Welcome to the Real P&L Trading Show, where I share my real P&L on 4 accounts and share my proprietary safe wheel strategy for free. Let me know if my audio is working in the comments and video and everything's going okay. Also, be sure to post any questions you might have. I like to get to all the questions, but sometimes they come in a little late, so make sure you post those earlier rather than later. I'm going to go ahead and move forward here based on the earnings edge. What happened with the earnings edge? So I'm looking at my earnings edge account here. You can see my account value is 6,400. Obviously, that's lower than what it's been over the last few months. So the earnings edge has hit a rough patch. Basically, what happens with the earnings edge is what I'm looking for is the market to move a lot. So when it goes sideways and there's not a lot of volatility, the earnings edge doesn't do quite as well, depending on the stock, of course. Do you guys hear me okay? I want to make sure I see comments letting me know that my audio is working okay. Type in the chat there. Okay, so let's take a look at the earnings edge account. I'll put it in the spreadsheet. And what was it? 6,400. Audio's good. Thank you. Thank you, John. 6,400. Yeah, down. So last week I traded Costco down 838. So Costco was up for a couple days. It was up $300-400, and then it just went flat. So it kind of went down and then it went back up. So it kind of didn't move away from the mean. And basically, that's what you need with the earnings edge. You can see that my record with the earnings edge: 32 wins, 27 losses, 9 break evens. Average wins 651, average loss 622, about a 54% win rate. And you can see the returns in 2022 vastly outperformed. Underperformed in 23 and vastly outperforming in 2024. You can see that the earnings edge is up 28%, where the market's up 27% since the beginning of 2022. The market's has made quite a run. Let's see what the SPY. SPY is 606.94. Up again this look from last week to this week. Up 27.5% this year, up 24% last year. So the market's on a tear. It's doing quite well. Outperforming here. I mean, the earnings edge and the safe wheel and the S&P 500 are about break even right now. Okay, let's talk about the Premier Level 5 Pro. And that is this particular account right here. You can see where I have a majority of my money. See there, 527. So for example, you can see 455.031, 455.031. So I'll put that in the spreadsheet. 455.031. Up a little bit from last week. So you can see where I have a majority of my money, because that's where I have a majority of the confidence in what I'm trading. Obviously, the Premier Level 5 Pro, I started with about 404,000 on July 19th, 2024, when I started this particular trade plan, because I tweaked it from the PL5. And now my account's at 455,000. I'm up $51,124. I am up 12.66%. And the market since then is up 10.56%. So the market's up a lot too since that time frame, since the middle of July. So the PL5 Pro is doing quite well as expected. And of course, that's where I have a majority of my net worth, because that's the trade that I have the most confidence in. All right, let's talk about the Premier Level 5 Pro S&P 500 variant. This is a variant that I run. It's specifically designed to outperform the S&P 500. Let's take a look at the account value. I can't show you the whole picture here. because if I show my account number, I'll just kind of drag it over here, kind of partially put it on the screen. So you can see the account has 32,958. 32,958. So it's up a little bit from last week. 32,958. Now with the PL5 Pro, the S&P 500 variant, I've got started with about $30,000 in this account. It's up to 32,958. Also from the middle of July, July 16th, up $2,958, 9.86%. And the S&P 500 from July 16th, 2024 is up 7.75%. So the Premier Level 5 Pro S&P 500 variant is outperforming as expected. This one will go down with the market though too, as opposed to the S&P 5, as opposed to the Premier Level 5 Pro. That one will go down on the first leg down and then recover very quickly. The S&P 500 variant will go down with the first leg and then probably not recover as quick because it is more highly tied to the S&P 500. But it is outperforming by about 2% over about a 5-month period. Okay, let's talk about the Safe Wheel. Let me get the account. I'm going to ask you guys some questions about that, about the Safe Wheel and what you would do. Safe Wheel account's got, no, that's not the right account. Safe Wheel account has 5,401. That is the account value, 5,401. And I'm going to put that in, 5,401. So it's actually up a little bit since last week. But you can see how it's done in 2022. It outperformed by 40%, outperformed the S&P 500. Then in 2023, it underperformed by 20%. Now it's underperforming by a lot, 40%. The Safe Wheel is actually only up 8%, and the S&P is up 27% since the beginning of 2022. So you can see that the Safe Wheel has been struggling a little bit. And of course, I have the $5,000, $10,000, $5,000 to $10,000 in the account. So 5,401. Down 15, 16% this year. So let's see what I need to do next with the Safe Wheel. I'm trading JD, and last week I sold a put. So my goal was to collect that premium, which I did. You can see that I did not get assigned, okay? So now I'm kind of back to square one. I have my put hedge, and I have my long call to protect my put hedge. Okay, so, and you can see that JD is trading at 41.90. So what would you guys do if you want to type in the chat? What would be my next play, or what should I do at this point? Just give you just a second. So tell me what you guys would do. Type it in the chat there. What would be my next move here? Check the put hedge. Okay, so I'm going to check the put hedge. That is correct. Let me check it. So it's under 100 days. I don't own 200 shares. It's under 100 days. And the so now my put hedge is the 28 strike. And I'm currently trading at $42. So if I were to take that, I want to make sure that my put hedge is close enough. So 42, let's say what? 0.07 times, I want to be within 70%, 29. So it's got to be 29 or higher. It's at 28. Okay, so now that my put hedge is not close enough to the money, what should I do at this point? Because we're at $42 here. Okay, so what should we do? The call, yeah, you're saying the call is up already. Yeah, this call is getting closer to the money. Yeah, it's up 65 bucks or $59. Here's the thing. What I need to do is move this put hedge, right? And I need to move it closer so it's within 70 to 80%. But the problem is the JD is over $40. Remember, I want to be between $20 and $40. So I'm going to move the put. If I go ahead and move this put hedge, I'm not going to move it into a stock that's over $40. So I'm not going to go, I'm going to get out of JD now because it's time to move to put hedge, which means I can start over. And if I start over, I'm not going to go into a stock that's over $40. So I'm actually going to clear out of JD. So I did have my long put. So my put hedge took a hit, right? Because the stock moved further from the put hedge, but the long call kind of helped me out, right? So the put hedge went down $98 and the long call is up 64. So this thing kind of covered me like it was supposed to. Now I'm going to go ahead and just clear out of JD altogether. I'm going to sell everything and I'm going to start over. So let's do that first. I'm going to just sell off these positions. Looks like I might be able to get 42, 43 for this, -3. Okay, so that filled. Now I want to get rid of this. I'm going to take my money on this one, 67. Okay, so that made me 67 bucks, which was nice. Here's my filled positions. Okay, now I'm cleared out. I have nothing. I am going to use, I'm going to go ahead and look at the real quick, like, let's see, just the how to pick a stock. So I want to make sure that I have an underlying, I like between 23 and 37, between 20 and 40. I'll check to make sure that the premium that I collect is high enough at the 1% level. I'll make sure that my liquidity is good enough. Make sure there's no earnings coming up, and make sure my put hedge costs aren't too expensive. I don't want them to be over $4.50. And make sure that my put hedge strikes are available. So I went through this already and I picked LI. LI is a stock that I've been in before. I'm not going to go back into JD or back into the last stock that I was in because that would have been within 1 month, and then I would have that wash rule. So I wouldn't be able to, the taxes wouldn't work for me. Actually, when I think about it, I wouldn't have to worry about the taxes on JD because I don't think I ever owned any shares. But anyways, I'm going to go into LI. Because first of all, it's trading around $25, and can I get over 25 cents at the money? Yes, I can get 83, 86 cents, so that's good. Check the premium. The high liquidity, does it have good liquidity? Yeah, it's good enough. It's not as 33, 36 over here, 55, 60, good enough liquidity. Are there any earnings coming up on LI? No, the earnings were a little while back. The put hedge. So I'm going to go, I want to get around 150 DTE, but it looks like I have to choose between 193 and 102. I'm going to take 193 because if I get into this one, then next week I'll have to move it again. So here's my put hedges. Good strike availability, not too expensive. So the first thing I'm going to do is buy a put hedge. So we're at 24.79. Let's bring this over here. 24.79 times 0.8. So I'm going to get about 20. I don't want to do 19, that's too low. So I'm going to buy the 20. I'm going to buy 3 of them. Why 3? Because I have between $5,000 and $10,000. You can see the mid 181. See if I can get in at the mid on LI. Yeah, that filled me at the mid there. Okay, now I want to get my long call. I want something around 5 cents. This is between 8 and 11. This one I may be able to get. It's probably going to be this one. Let's try it. See if I can get this for 6. I don't know if I can or not. Oh yeah, mid's 5. I might be able to get that. Just get one of those. Okay. Let's go with 6. All right. Not much liquidity there. What was that, the 30? Let's go with the 30.5. See if I can get this for. Now this mid's 8. See if I can get it for 6. I don't know if I can or not. No. So let's go here. See if I get this one for 5. No liquidity over here. See if I can get it for 6. Okay, I don't want to give me that one. I'll go here. See if I can get that for 5. Okay. All right, so I got that one for 5. That was the $32 call. Okay, now my hedges are in place. Let's see here. Let's get rid of this guy, magnificent. Now my hedges are in place. And so I'm going to run the traditional wheel on LI. So I'm just going to go ahead and sell a put. I want to get at least 25 cents. What I'd like to do, I could go here, the 24. I like going to the 24 because if I get called away, I mean, if I get assigned at 24, that's getting closer to my put hedge. So I like this. So I'm going to go with the 24. I'm going to sell one of these. Mid is 34. Sell one. 24 put. Okay, so now I have my all my positions established. Collected $34 here. Always ABC, always be collecting. So that's what happened there. So now my positions are intact. So let's see what the comments have to say. John Doe says, hey. And says the audio is good. I appreciate that. And I asked the question, what should I do first? And Will said to check that hedge. And he was right. Check that put hedge. Avery says, hit that like button. Don't forget that hit that like button. If you like the fact that I show my P&L and actually trade right in front of you, hitting that like button is going to help my channel grow, and that's going to help kind of move my cause forward. I want other instructors to show their actual P&L, to actually trade in front of you, to not be hiding things or sharing only the wins and hiding the losses. Will says the call that I bought on Friday blew up. Yep, that was up. What did I make on that? $67 right here. And Will says I should sell a put. Right. Okay. And Steve says check the put hedge for 70%. Right. That's what I would initially was supposed to do, is check that put hedge. And then Will realized we're closing out the position. Yeah, because right, we were over $40. So if we move the put hedge, that opens up everything in terms of we can start over. And then when we looked at the stock, it was over $42. And Will says, at least you made some on the way out with that call. Yep. Because what happened was the stock went up so high that it pulled away from my put hedge and made my put hedge go down in value. And then you can see how that long call, that little $5, $6 call, paid off. Will says he hasn't gotten his coffee yet this morning. And Steve says, roll up the put hedge. And that's why I was asking you guys what to do, because it was a little bit tricky, because yeah, normally that's what I would have done, is roll up that put hedge. But then you think about it, when you're starting over, when can you start over? You can start over when you move the put hedge. That gives you the opportunity to start over. And if you're going to start over, you can get out of a stock when it's the price is over $40, and that has to do with the amount, that has to do with the positioning, the sizing, right? I have everything sized, and if a stock gets over $50, I'm going to be oversized. I won't be able to have enough capital between $5,000 and $10,000 to play with that stock, to do the safe wheel with that stock. So I need to keep my size in check, and that's the reason why I stay between $20 and $40 with a $5,000 to $10,000 amount in capital. And Will says he'll always recommend GME or DJT for the memes. Yeah, but GME has earnings. I'm sure GME has a lot of stuff going on in terms of price. It's probably way high priced. It probably goes between out of the $20 and the $40 range on a whim. So that's why I stay away from it on the safe wheel. And John Doe was also, he was considering GME, it looks like. John says the call skew is noticeably in GME, and interesting volatility increases as the stock price increases. So it's got that reverse kind of skew. I was talking about that with Avery the other day. Apple has the same thing. Let's look at GME. When you talk about that skew, so GME is trading at 28.50 approximately. You can see that the puts are still more expensive, but not by a lot. Typically, puts are more expensive by more than this, like Apple, for example. If we look at the money, the 225s or the 245s, you can see that the calls are just as expensive, in fact, a little more expensive than the puts. And that's kind of a rare thing, but that's an Apple thing. And I think it's a gold, GLD gold thing also, and maybe with oil. The kind of the risk is to the upside, it looks like. That's why it costs more here, with the calls cost more than the puts. Very interesting phenomenon, which is pretty rare. Call skew, right? Alex, given the purpose of the safe wheel is to grow a small account and a large account, based on your backtest, how long would you expect growth time to be? Well, my backtest did quite well. As far as my forward tests, we're underperforming right now. So it's just hard to say what my expectations are. I mean, it's just, we're up 8% over a 3-year period. So it's not growing as fast as I like, obviously, with the safe wheel. One thing that's good about the safe wheel, though, it is a level 5 trade, so you are hedged if the market crashes. So you don't have a lot of that volatility. So that's kind of the advantage. Also, it's really good to learn. It's a great learning tool on learning how to trade options. And also, that's what I like about it. But again, you can see how much of my money is tied up in it compared to the PL5 Pro, right? You can see how much money I have in the PL5 Pro. So the PL5 Pro is definitely the way to go. Will says the law of averages means the safe wheel will get a huge boom next year. Yeah, that is probably a higher probability scenario than it actually continuing to go down a little bit like it has. Alex, I'm curious on the numeric data of the boom next year. Yes, there are profits, but it doesn't seem like it will hit PL5 anytime soon. Right, so what you're saying is it's not going to grow really fast, really hard, real fast. Yeah, and it's not really designed to do that. It's more designed to protect the capital and then grow slowly, and designed to outperform. Based on the back test and everything, and the forward test for a couple of years there, it was outperforming. But when the market has a 24% gain one year and a 27% gain the next year, it's going to be difficult to outperform with anything that you're trading. Maybe the traditional wheel might outperform, but then when you have that drawdown, when you have that crash, what's your traditional wheel going to do? You're going to be stuck. Your capital is not going to be working for you, and you're going to have large drawdowns. That's why I like the safe wheel better. But really, the safe wheel is a really good, when you get down to it, it should outperform. It was outperforming. It's a good learning tool also, but the PL5 Pro is really the way to go. I mean, that is, if you have a lot of capital, if you have over $100,000, you really want to be playing with the PL5 Pro type trade. But if you don't, you take some chances with the Earnings Edge. You can obviously see that I took some, that's a, risky. It can be risky, but also it can pay off too. So there's some rewards with that. But that is the way it goes with the smaller accounts. You got to take some risk, and sometimes it doesn't pay off, sometimes it does. But when you get to the larger, higher money, PL5 Pro is the way to go. Alex, in case wherein I don't have a lot of capital and trying to grow my account, now I'm moving up, so I can invest in the PL5. Yeah, so you can get into the PL5 Pro with as little as 30,000. So if you have less than that, yeah, I mean, you're going to take some risk to get up there, or try to grow it with the fact. Talking about something that hasn't done well lately, this is the Earnings Edge. So that one's due. Talking about being due, that one's due to make some money, but you never know. Just never know. Will says, how has the Earnings Edge been doing this year? Not good. I mean, it has not been doing well because like the market has been just going straight up and it hasn't really been that volatile. It was volatile on a little while back. So you can see the Earnings Edge this year down 33%, but that's not, it'll draw down 30%, 40%. I'm not surprised. I've had a few losses in a row. I'm not surprised. It'd take maybe 2 wins and it'll be back. But I'm not, putting a lot of money into there, $5,000 to $10,000 into that. But I'm trying to get that $5,000 to $10,000, up to, 10, 20,000. It was up to 11,000 at one point, but that's the way trading is. When you're trading something that's a little more risky. Alex, being due sounds like a roulette talk. Yep. It has some risk, no doubt. No doubt, Alex. You want to get your money into the PL5 Pro for sure. That's where I would get my money into. So your goal is to get your capital up into that 100,000 plus or $30,000 plus and get into something more conservative. Will, Carl, do you ever look back at steady options, your inspiration for the Earnings Edge, and see how they've been doing? No, I haven't really went back into steady options. They do some interesting things in there, but I think what they're doing is also kind of high risk, high reward type stuff. I think most instructors, 99% of them are all doing that high risk, high reward type stuff, because when they make a lot of money, they can show it and it looks really good. And when they lose a lot, they figure out ways to hide it. They don't really show it. That's what I've seen. So it's good to have a high risk, high reward program if you're able to hide the losses, right? And you share the wins. I'm not going to hide the losses. You're going to see what I'm doing. And, people are going to talk about it like Alex right here and saying, I'm down. Sounds like a roulette wheel. Yeah. And I'm not disagreeing with you. And I'm not going to try to hide my losses or try to candy coat whatever is going on. This is what happens. When you have a high risk, high reward system, sometimes the risk part comes out. And if you want other people to also share their P&L like me, and when they have a system that has a high risk, high reward, and when the high risk shows up, do you want them to share it? Because if you do, that's when you want to hit this like button right here, because I am trying to change this industry. I want these guys to share all their trades, not just the wins, like I'm doing. Alex, I want to see your success. It just seems like something is having a speed bump. Absolutely. And I don't have a problem with you calling it out the way that you are, because it is what it is. It's reality. Like, I'm not saying you're trying to come after me or anything. I have no problem with it. I'm the same way. If an instructor is losing money, I'm going to call it out. I'm not going to sugarcoat it for them. You know, it is what it is. And that's fine. Totally fine. I'm okay with that because that's how I am. That's my personality. That's who I am. And I'm just going to tell the truth. And if that's not good for me sometimes, well, that's what it is. Truth is the truth, right? Okay. Any more questions? All right, don't forget to hit that like button. Hitting the like button helps grow the channel, helps me get the word out, helps me spread the word to show other people, hey, everybody should be sharing their P&L out there. You don't want to learn from it's up to you. If you want to learn from someone that doesn't make money trading, that's up to you. But you need to know, you have the right to know if they are making money trading or not, right? You have that right. And if you want to learn from them and if they're not making money trading and you still want to learn from them, that's fine. That's your right. I don't believe you want to learn from somebody that's not making money trading. I would not want to learn from somebody that's not making money trading. So if you have that same philosophy, hit the like button, because that's how I'm going to spread the word to other people that potentially are out there looking for a mentor or someone to learn from. They're going to learn, hey, they need to share their P&L. And that's hitting that like button is really what's going to help that happen. Okay. So in parting, if the P&L is not real, what else are they trying to conceal? I'll be back next week. Thanks, guys.